Hello friends, this is episode 8 of our video series on the IRS collection process. My name is Hortensia Torres and I am a tax attorney and also your online tax consultant. In today's video, I will explain what tax fraud is as well as what the relevant penalties are. As always, if you want to learn more about this and other related topics, make sure to check out our free guide, Stop IRS Fear, a taxpayer guide to the IRS collection process. And now, what exactly is tax fraud? It is an illegal activity in which a person or company deliberately avoid paying taxes. This is a federal offense under the Internal Revenue Code and it is subject to substantive penalties. You commit tax fraud when you intentionally do not file a tax return, file a false return, do not pay taxes owed, or report inaccurate information in order to lower your tax liability. Reporting inaccurate information includes making false claims, understating your income, overstating tax deductions and exemptions, falsifying documents, claiming personal expenses as business expenses, and much more. What are the penalties for tax fraud? Well, it depends on the type of fraudulent activity. The failure to file a tax return carries a fine of up to $25,000 as well as up to 1 year in prison for every year of unfiled returns. If you fail to pay taxes, then you could be subject to a fine of up to $25,000 and imprisonment of up to 1 year. It gets much worse if you file a fraudulent tax return. This offense is punishable by up to $100,000 in fines and a maximum of 3 years jail time. And last but not least, tax evasion, which refers to using illegal activities to avoid paying taxes. This carries up to $100,000 in fines and up to 5 years in prison. You can see now that tax fraud can have terrible consequences. In our next video, we will discuss what we can do to avoid these grave mistakes, as well as how to minimize the damage if we're already in trouble with the IRS. I will see you in episode 9, and until then, don't forget to download our free guide.